valuations may present a risk to the rally, but there's one thing that we're not seeing, and that is widespread bullish investor sentiment. That's where you tend to see major tops as well, is when you get the valuations extended, but that sentiment is just way too bullish, and we don't have that condition right now. If anything, it appears that this bull market remains quite hated because sentiment is quick to shift back toward bearish views, even as we have the S&P 500 holding near record highs. So retail investor sentiment, you can measure that with the AII survey. Last week, it showed bearish views running at 49.1%. That easily outnumbered bullish views at 31.6%. Now, what this chart on here shows is you've only had this happen one time in history where you've had bearish views running that high when the S&P is within 1% of an all-time high. Again, that has happened only one time in history, back here in 2013. And the table down here plots what happened to the S&P 500 for several forward time periods after seeing that. And you can see, 6 months out, a year out, you had some really strong returns following that. Now, this is, you take it with a grain of salt because this is a very limited sample size, just one instance in history. But again, it just goes to show how quick investor sentiment has been to shift back into fear territory, which is not something you see if we were at a peak in the market.